All right, today we are cracking open a fascinating case study. NAMM Minerals, or NAMM. We're going to get under the hood and really figure out what hidden forces can make a stock price just, well, explode overnight. Let's dive right in.
So you've seen this before, right? You're looking at a stock chart, everything's normal, and then bam, it just goes vertical, like a rocket launch. The big question is always, what in the world just happened? It's a puzzle. And today, we're going to put on our detective hats and piece together the clues.
Okay, first things first. Like any good investigation, you have to start with the evidence. Before we can get to the why, we need to be absolutely crystal clear on the what. So let's lay out the telltale signs of a stock explosion. So you're looking for three key things here. Think of these as the fingerprints at the scene of the crime. A rising price by itself? That could be anything, just market noise. But when you combine that rising price with a massive, unusable surge in trading volume and the stock starts swinging wildly up and down, okay, now we're talking. That's the market basically screaming that a new story, a new piece of information has just hit the street and grabbed everyone's attention. All right, so we know what the explosion looks like. Now for the really fun part, examining the scene for clues. What was the catalyst? What actually lit the fuse? And, just as important, what was the market environment like that created this kind of perfect storm? So what could kick something like this off? Well, it could be any number of things. Maybe a big corporate announcement, some fantastic news from an exploration project, you name it. But here's the real key, especially for smaller companies like NAMM. It is almost never just one thing. It's usually a cocktail. You get a real piece of news, like a promising discovery, and then you get that powerful, speculative energy piling right on top, where hype starts feeding on itself. And that's when things get truly explosive. Think about it like this. You have the company itself, and then you have the whole neighborhood it lives in. For NAMM, that neighborhood is the mining sector. And that neighborhood is already kind of wild, you know? It's super sensitive to news, prone to these huge swings. But then you have these massive global tailwinds blowing through the entire neighborhood, like the insane demand for minerals for EV batteries. So when one company in that neighborhood gets just a little spark of good news, phew, it's like lighting a match in a room full of gasoline. Okay, so we've got the fundamental pieces of the puzzle, but the facts alone don't explain the sheer speed of a surge like this. For that, we've got to look at the human element. Market psychology is the jet fuel poured on the fire. Let's explore how it ignites. Ah, yes, FOMO, the fear of missing out. It is one of the single most powerful forces in any market. It's that little voice in your head that sees a stock taking off and just screams, everyone else is getting rich and you're just sitting here. It's primal, it's powerful, and when it takes hold, it can trigger an absolute buying frenzy that pushes a stock's price to levels that are completely, totally disconnected from its actual value. And this is how that FOMO gets turned into a weapon. We call it the hype flywheel. It all starts with a small catalyst, a little piece of news. That creates some momentum as early investors jump in. Then that story hits social media and online forums and boom, it's amplified, spreading like wildfire. Finally, that widespread FOMO creates a massive spike in demand. And here's the real kicker. For a low float stock, which just means there aren't that many shares available to trade, this sudden rush of buyers causes a vertical explosion because there simply isn't enough supply to go around. So we've cracked the case of how the surge happened, but the story isn't over. Not by a long shot. The real question is, what happens next? Because after a move this explosive, a stock typically follows one of three very different paths. So what are the options? Well, first you've got the bullish case, where the company actually follows up with more concrete positive news, and the price either keeps climbing or settles in at a new higher level. Then there's the neutral path, where things just chill out. The stock trades sideways, the volume dries up, and the market basically just digests the move. Or you get the bearish scenario. This is where the hype fades, no new good news comes out, and the price comes crashing back down to earth. And it's so important to remember, what goes up on hype can often come down just as fast, if not faster. And that brings us to the critical risks you have to watch out for. Is the stock now fundamentally overvalued? I mean, is it just way too expensive compared to what the business is actually worth? What happens if the trading volume vanishes and you get stuck, unable to sell? Can the company even pull off what they say they're going to do? And what happens when the story, the narrative, breaks down because the hype got way ahead of reality? These are the crucial questions you have to ask to avoid getting burned. Okay,
We've put NAMM under the microscope. We've done our detective work. Now, let's turn all this analysis into a practical tool you can actually use. We've distilled everything down into a 5-step playbook for the next time you see a stock start to go vertical. Here it is, your playbook. Number 1, watch the volume before you watch the price. That unusual volume is the earliest clue. 2, identify the catalyst. You have to ask yourself, why is this moving now? And then go verify the reason. 3, know what game you're playing. Are you trading a story for a few days, or are you investing in a business for years? Be honest. 4, manage your risk relentlessly. Volatility is a two-way street. And finally, number 5, look for confirmation from the sector. One stock surging is interesting. A whole sector rising with it? That is a much, much stronger signal. And this all brings us to the most important takeaway. Mindlessly chasing every hot stock is a gambler's game, plain and simple. The real edge, the sustainable edge, comes from understanding the mechanics of why these things happen, the catalysts, the psychology, and the risks. That understanding is what transforms you from a gambler into a strategist. So the next time you see a stock chart go parabolic, you'll have this framework. You'll know how to look past the hype and act like a detective. You'll know what's really going on under the surface. So the question is, what clues are you going to look for first? Thanks for digging into this with me.